Following the worst Black Friday sell-off in stocks since 1931, we check in with Gareth Soloway of In the Money Stocks and ask him what the charts are saying. Is this just a blip or is this a trend reversal? Look out also for the one chart that makes Gareth so bullish on gold. And remember, if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to Goldcore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts. Gareth Soloway, welcome back to Goldcore TV.
Hey, thank you so much for having me back. It's a true pleasure.
Now, we have just come off the back of what's been described as the biggest Black Friday sell-off in stock markets since 1931. Has something fundamentally changed? Has the trend changed here, or is this just purely a blip that has lasted for the weekend?
Yeah, so I mean, definitely the sell-off was caused by the fear about this new variant, this COVID variant. Although, again, the market tends to kind of sell first, ask questions later. We're seeing a little bit of a snapback in the markets here this morning. But there's no doubt that the markets, to me, continue to be kind of built on a house of cards, where it's in a situation where we know the Fed is starting to taper. We know inflation is high. There's a lot of negatives out there, potential slowdowns in the economy. But you're going on kind of what we were discussing earlier, which was prior to the start of this interview, which is that greater fool theory, which is investors are still willing to put money in because they think the markets will just always go up. And that is always very, very concerning to me. Again, for me, I just look at the charts, right? And if I show the charts here, check this out. Absolutely amazing channel on the S&P 500 here. And you can see how the market has just been inside of this upward sloping channel for a long period of time. And if you look closely, just prior to the sell-off, which was on Friday, we kind of just got up right to that upper trend line. We did it over here,
line, didn't we?
Yeah. And so it was almost as if it was destined to come because the charts were up at that upper range. And it, again, did we know that the new variant was going to be the cause? No. But again, the market has a history. Every time it gets up here, it just somehow pulls back. And again, amazing how technicals work like that. Again, you could never guess in a million years this new variant would just pop up and freak people out. But the charts were telling you something was coming.
And I suppose people get hypersensitive when we see things coming towards the top of the channel line like that. And that if we get any sort of negative news, they may overreact to it.
Yeah, I think that's what it tells you. The upper range of the channel tells you that the markets are overbought. I'm sure there are bigger investors out there that are aware of that. And they're very, like you're saying, hypersensitive to anything coming out, which they're saying, okay, well, we know the technicals are telling us a pullback. This must be it. So let's just dump it all here. And it creates this kind of momentum shift to the downside, at least in the short term. I would wonder again is, at some point you have to figure we go back to the low end of that channel. I don't know if this is the start of it, but that would take us substantially over 10% lower if we reach the lower end of that channel from the recent highs. So, I mean, you definitely have this thing. And the other thing to keep in mind, I still remember this vividly. 2 weeks ago, whether it was social media or whether it was the talking heads in the media, everyone was predicting this end of year Santa Claus rally. And if there's one thing I've learned in my career, it's when everyone is predicting something, it usually doesn't come to pass. And here we are, going into December with a nice little sell-off. Same thing happened in Bitcoin. It was breaking 65,000, the April 2021 high. Everyone said 100,000 within a month. Didn't happen. Here we are 2 months later almost, and we're down in the mid 50,000 range. So it tends to be a contrarian indicator when everyone is predicting something.
And so you're saying that it'd be about a 10% correction before we even test the bottom of that channel, which is a significant correction from where we are now. And then you're probably you're looking for kind of a confirmation of a trend change. So we've got significant move on the downside before we can actually start to talk about a change in the trend here. Is that what you're suggesting?
Yeah, I mean, there really is, right? So here, if we go back to the S&P 500, if you look at the risk versus reward on this chart, The risk is that you go back. Let's say you wanted to short the market or bet that it's going down. The risk is that you go back to this trend line, which isn't that far away, right? Especially with the futures here up about almost 1% in the pre-market. The reward on being short is all the way down to this lower trend line. When again, you could see if you zoom out, you did hit it a couple times prior. You hit it over here and over here, but really it hasn't been hit in a long time, which again makes me think that there's more of a likelihood we are getting close to that corrective move because no one expects it, right? You know, you could say, all right, we haven't hit that in forever and no one's thinking it will happen. And then it finally does go. So I think that that's what you got to keep in mind. The risk reward favors the downside here. But like you're saying, a change in trend for me, you know, if we were to break out of this channel to the downside, I think that's what would have to happen. And then I think you say, okay, we're entering a potential bear market. But if we go down to this lower trend line, you would then actually be a buyer of the S&P until it breaks. And then you'd likely get another bounce off of it. I don't know if you'd go as high as the upper end of the channel, but you certainly at least could go up a decent amount, which would make a decent amount of money there.
At which stage the risk reward then is to be long.
Absolutely, long with a stop of a break of that lower channel trend line. Absolutely.
If you're wrong, you'll find out relatively quickly.
Yeah, and you can react quickly since you're buying it right off of that line. If it goes below, let's say even stays below for a couple of days to confirm, then you would say, okay, it broke, change in trend, potential bear market, exit, small loss.
And I'm assuming then that we're looking at S&P. This still maps over to the Dow and the NASDAQ as well.
Absolutely. So the NASDAQ, which had this amazing run, it pierced the upper range of the channel, but the same channel exists here on the NASDAQ 100. You can see again, the interesting thing with the NASDAQ is that it's tended to hit the lower trend line more often, more so because there's more volatile swings in tech stocks, right? So you get these bigger, massive moves. So you can see right here, you know, you were at the top, you went to the low end, you kind of bounced halfway, tested the low end, then you went to the high, low again, high, low. And then here you could see this was kind of max greed up here where the trend line for the first time, 2 times in a row pierced, but the trend line is so powerful that it just dragged or took the NASDAQ 100 back below after piercing. And again, you can see how we've come back down. So the same thing kind of applies. You know, your risk on being short is that it goes up here again, you know, resistance. Your reward is all the way down to about 365 on the QQQ, which is about a 30-point drop from here. And again, if it broke, you'd buy that line just like over here. I mean, look at the buy on that. That was an incredible buy.
Yeah.
You'd buy there. And again, if it breaks, you exit real quick. If not, you have a potential for quite the move back up. And the upward channel is still intact as long as you don't break this lower trend line. And
you can probably expect as well with that move in October there in the NASDAQ, it was just over a month it took from the lower end of the channel line to the upper end of the channel, whereas the move before took a couple of months. So you probably saw a significant degree of being overbought in that NASDAQ, in the NASDAQ at the upper end of that channel in comparison to the rally, but the previous rally.
Yeah, absolutely. You saw so the rally from the October to November pierce of the low line to the upper trend line there, that was so fast. I mean, it's so rare to see, but I think it shows you how much investors were just waiting for that dip, that buy the dip mentality to just charge right in. And then they just chased these stocks up. I mean, we saw the RIVN move where it went from like $100 to $175 in a matter of days. I mean, just incredible zeal for buying stocks at levels and just thinking they're going to be able to sell it to someone else higher. Now, what's concerning is RIVN actually came all the way back in very, very quickly. So there were no doubt institutions that were looking to unload their positions very, very quickly, which again is concerning, right? I mean, it's one thing when you see GameStop rally up, 500, 1,000% and hold for a decent amount of time like it did from March and April. Even after correcting, it still held a lot of those gains. RIVN really came back in and is barely above. In fact, if I bring up RIVN here, let me just take a look at this chart. There's not a lot of data since it's a new IPO, but you can see here how the rally to the upside on RIVN was very short-lived and it came right back in. And I think that's a concern to me, that you're not seeing the staying power, or you're seeing institutions that are much more eager to unload these big pops.
And then how does this map across to crypto? Because we've seen a significant pullback in crypto when it broke to that new high. Yeah,
so the first thing you got to recognize with cryptocurrency is that, like I mentioned earlier, is that we got up to that 65,000 high. We even got above it by just a little bit. I think we got to 68,000 and change on Bitcoin, and it just couldn't hold. And part of that was that people were too bullish. So you have to think about take a market of 10 individuals, right? If all 10 individuals in that market, and that's representing the whole entire stock market, are bullish and long, ask yourself who's left to buy, which is why it's so concerning when everyone is bullish on something like Bitcoin. In addition, most platforms don't allow for shorting of Bitcoin, which takes away that short covering rally aspect in Bitcoin. Now, there are crypto websites where you can short Bitcoin, but the average person doesn't short. They're mostly long. So you had this overzealous kind of expectation to major upside on Bitcoin. It just didn't have the legs there. And then you've seen it come in here pretty dramatically down to the downside. And again, my biggest fear for crypto is, as much as I love it long term, you can see how when the stock market falls and deleverages a little bit, cryptocurrency does fall. And that is something that concerns me, because there's so much leverage in the cryptocurrency market. You have 10 to 1. You even have some players doing 100 to 1 leverage. When that unwinds, it could really crush Bitcoin. Even though I think it's a great buying opportunity, people that are long here have to be concerned.
And I think we're seeing that leverage not just in the cryptocurrency market, but we're seeing it significantly as well in the stock markets as well. And we've got leverage, levels of leverage that we haven't seen in decades, which again puts the stock markets on quite shaky ground if we see a significant correction. Also, the impact that it will have if we see a significant correction, and even if we get margin calls on or increased margin calls now, it could lead to some serious liquidations.
Yeah, it could. And in fact, you kind of saw that in oil on Friday, right? So oil was down significantly, and then all of a sudden it just started to collapse faster and faster and faster, and had one of its biggest down days in a really long time. And what actually happens in that situation is you get this deleveraging event where you have a lot of, hedge funds, and people look at hedge funds like they're godly, right? Like they know. In all fairness, there's about 1% of the hedge funds out there that are really smart. Everyone else is just kind of playing along in the game. So these hedge funds had over leveraged themselves on oil because oil had been in such a strong uptrend, just grinding up. So they have you
a good chart there on oil that you can pull up?
Yeah, let me bring up the USO here. Let's absolutely take a look. You can see the massive move down here. And again, I can go even to the intraday chart here. Let me see if I can bring up the intraday. But basically what ended up happening, and here again, here's that big drop. So you gap down on oil, and then you could just see the selling pressure all the way till you actually put in a bottoming tail, which was a nice little bottom signal. Today, oil's bouncing back about 5% thus far, which is somewhat expected once the deleveraging has concluded. But again, going back to the daily chart, these hedge funds were, leveraged to oil, thinking that, okay, it's just going to grind up. We'll see $100 like some of the big institutions were calling for. And then once you drop a certain amount, they have to sell some of their positions because the leverage is starting to erode their overall value. Like they have to maintain certain financial levels in their funds. So once these levels hit, it just was like, okay, well, we got to dump $1 million in oil or 2 million or $10 million in oil. And that created this deleveraging event in oil, which is very rare. I mean, you don't see oil down more than 10% very often at all. But Friday definitely showed us that deleveraging can occur, and it likely will occur again in different markets.
Longer term outlook for oil?
I mean, 6 to 12 months, I think you do see further downside. I'm looking at $50 target. Longer term, it's going to be interesting with inflation and then with the energy, the alternate energy trade. If you're looking 5 to 10 years out, I'm very curious with the push with alternate energies, how much oil is still needed. Do we start to see a reduction in oil demand? And again, I'm not sure on that, but I would definitely think that $50 in oil first, and then we'll have to keep an eye on inflation.
Now, before we move on to precious metals, I just want to get your take on what's going on in the bond market at the moment.
Wow, bond market. So we saw that huge run up in yields recently on the back of some inflationary data. We saw the jobless claims recently that were very low. It looked like we were going to take out the 1.75% on the 10-year, and then all of a sudden you got this new variant which just crushed yields on Friday. I'm in the camp where yields are going to go back up, right? I mean, if you're going to have inflation at 8% this past year, it's going to be at 8% in 2022. They're projecting, and probably 5% plus. the Federal Reserve has to react in the near term and try to curb it. Otherwise, you're going to have too many Americans hurting, right? So you have this situation where, the middle income and lower incomes, they are struggling because prices have jumped for all of the things that they need, whether it's food or energy or anything else. They're getting crushed. And Biden is fully aware of that. President Biden is aware. He knows he has the 2022 elections coming up, the midterms. He needs to curb inflation. So I think in the short term, Fed's going to try to push interest rates up a little bit to curb inflation. And then I think longer term, again, they're going to have to lower it due to a black swan event.
So quicker or more interest rate hikes to try and get inflation under control going to have an impact on the bond markets significantly. Obviously, it's going to have an impact on stock markets as well because of where real rates are at the moment. So, and then obviously we can't figure out, we don't know what the black swan event is, but we're vulnerable to one.
Yeah. So I mean, in the near term, I think the Federal Reserve will react harsher against inflation, assuming this new Omicron, variant isn't as bad as the markets on Friday thought. I think they're going to try to taper faster. They're going to try to curb inflation. But the one thing I know about the Fed is that the Fed can never get out of the way. They're always there to protect the market. So I think they'll let interest rates get to about 2%, maybe 2.25%. And then due to our debt, the financial burden of our debt, they can't let interest rates get much higher. And then inevitably, there's going to be another black swan event just because it's the nature of life, right? I mean, you go through hardships. So at some point, there will be another event, a black swan event, where they will then have to print more money. Interest rates will come back down, and we will just see the whole repeat again.
So as we've said on this channel many times, the Fed are fairly much handcuffed or painted themselves into a corner. Let's take a look at precious metals now. Gold significantly didn't have much of a sell-off now on Friday, given the moves in other asset classes. Can you put up a chart on gold there for a moment, and let's take a look at that?
Yeah, so gold had a nice pullback last week. This was on the back of that surge in interest rates and everything just prior to Friday's variant sell-off in the markets. But I think on a technical basis, this is the trend line you're really watching. So if you go back to December 2020, and then you look at this pivot right here, which is around the May to June period, and then look at what we were just bubbling up against before the recent sell-off. So for me, I just continue to be a longer-term bull on gold. I think every dip is a buying opportunity of significance. And I do think this latest one, you will see gold starting to push up. And when it takes out this level, this is still a beautiful inverse head and shoulder right here. When it breaks above here, I do think you're headed back to that $2,100 an ounce level in the near term. And I still have upside projections of by the end of 2022, I think you could be at $3,000 an ounce. Absolutely.
And then let's just have a quick look at silver as well, because we saw a significant pullback on silver.
Yeah, silver's interesting to me as it comes back in here. I think this is the low pivot you're looking at to monitor on the SLV, which is $20. It doesn't quite equate to that in the silver market on spot. But again, as long as you don't take out this low, this to me looks like a buyable pullback. There's lots of support right in here. You can see from these little pivots, you could actually extend it out even as far as right here. And that is a level that I want to see hold on the SLV here. And if you do, notice what you've been doing. You've been making a high, higher high. That's a bullish potential reversal here. So I think silver is something to buy here in the near term on this pullback as well, just like gold.
And if we do see a break of that lower resistance line, where are we looking to retrace back to?
So if that lower resistance line breaks, you then could start getting down towards, my guess is a retrace to this level here. So if you always want to go to history, right? And history shows you major pivot tops before breakouts. So this was a pivot top here. This was a pivot top here. And then finally you broke out with this big pop on silver, right? So if we did break this low here, you would assume it would go back to around the $18 level on the SLV, which then would give us a great buying opportunity. And I would absolutely, I mean, considering I'm long-term bullish on the metals because of inflation, because of the Fed, even though the Fed is going to talk a hard game and try to curb inflation in the near term, we know that the Fed cannot do anything longer term but ease and continue to print. I wouldn't even be surprised if, years from now we see negative interest rates in the overall, markets. So you have to be buyers on major levels. And this level right here would just be a beautiful accumulation zone on silver.
Now, is there anything else that you're looking at the moment? I'm particularly interested in anything that signifies weakness coming out of Asia. We've heard a lot of talk about China and the Chinese property market, and the various different property companies over there under pressure. Is there anything that you're seeing through the charts that can confirm or deny that?
Yeah, I mean, with the Asian markets, you definitely are watching the Evergrande situation, the real estate markets there. You have to be aware of what's going on. The question is, what type of stimulus can the government come up with? Again, you could argue that they have the ability to do even more than the US with the Federal Reserve. So again, that would be the big question there. And then what's the long-term impact? Although as an investor, I'm not so worried about the long-term versus what's going to happen in the next 6 to 12 months for investing in stocks and various things. But there's no doubt that they have a lot of problems there. You were saying, I think it's worth mentioning about these cities over there where you have, literally 5 million, towns and cities built for 5 million people, where you have literally just a dozen or a few dozen people living. Investors have invested in these. They probably will never have people in them. And there's a real problem there. I mean, the investors over there have invested in real estate, and it looks like you're going to see a major correction. Now, the one interesting thing is, would you start to see a shift away from real estate and then towards stocks? And that's where, again, I think the one interesting thing could be is, if you want to look at a silver lining, is do you see more and more investors looking at stocks like Alibaba and other things as the Chinese government tries to bring some of these stocks to the Hang Seng and back to the Shanghai composites? And could those be the next kind of bull market, because investors are being pushed away from real estate? And again, this is just speculation on my side, but certainly the real estate market all over the world is problematic. The Zillow news recently, where they said that they can't even make money flipping houses, and they're the ones that basically tell us what the Zillow estimate is on these houses, which is just mind-blowing. That is very bearish for the US real estate market as well.
Before we wrap up, just remind everybody where they can learn more about what it is that you do and where it is that you hang out in social media.
Awesome. Yeah, I hang out on Twitter. Twitter's my main platform there, at Gareth Soloway. So at my first name, last name. And then the website, inthemoneystocks.com. And I recently launched verifiedinvestingcrypto.com, where I put out crypto trades on a regular basis and do videos with information and education on the crypto market. So multiple places to find me. And again, I would start with Twitter. It's free and you can get a lot of information.
Right. Well, what I'm going to do is I'm going to put a link to both your Twitter profile and to those websites of yours in the description and show notes below this. But for now, Gareth Soloway, thanks for joining us on Goldcore TV.
Thank you so much for having me. Have a wonderful day.
Thanks for watching. And if you enjoyed this interview, check out these other videos on our channel. And remember, if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to goldcore.com. and hit the notification bell now. Like and share this video and put a comment down below so that other people can find it. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts.